Good morning, ladies and gentlemen. My name is Ajay Mahajan. I represent IDFC's wholesale banking business. And I have extreme pleasure and honor this morning to welcome Mr. Ajay Piramal to our conference. He's taken time out on a busy day to be with us for an hour or so to take us through the group strategy, the Piramal group strategy, the businesses that they've been building. I'm sure the interaction with Mr. Piramal will be of extreme interest to all of you. So with no further ado, may I welcome Mr. Piramal to the conference.
Thank you.
Thank you very much for making time and spending some time with us and taking us through your businesses. As we have just discussed on the fly here, there may not be a very formal presentation, but I would sort of just kickstart the conversations with him by asking maybe a broad question on what the sort of strategy Mr. Piramal is after a large encashment of your formulations business that happened in 2010. There was large cash that came into Piramal Enterprises. Since then, you've been making a lot of investments, and many of those investments are doing exceedingly well. The street is tracking you. The market capitalization has improved significantly. Even after that encashment, people had some doubts as to what the group will do in terms of how to deploy further value creative sort of resources in the firm. We have seen lots of investments that have happened. Maybe you could start sharing with this group, this distinguished audience this morning, as to what the broad strategy at Piramal Group now is, and maybe then we can dwell into some specific questions as we sort of drill further, and also to open the session for Q&A later.
Thank you. Is this, yeah. So in 2010, when we sold our domestic business, I just want to give you the environment as to why we sold and what we did. We've always followed in our group a contrarian strategy, if I may say. So during the late 80s and early 90s, we acquired a lot of formulation businesses in India at a time when people were not interested in acquiring them, because we felt at that time that there was a good scope for formulations and a good scope for branded products, which a lot of the multinationals, as you know, had brands which had been there for several years and were very prominent. In 2010, our feeling was that the markets had actually reached the peak, and these valuations that were then, there was a lot of hype as far as the domestic market was concerned. And therefore, when we got a valuation which was 30 times of operating profit and 9.5 times of sales, we said that it made sense to sell out. In 2010, the India story was still, it was a good story, if I may say, of India. That was just the time when UPA 2 had come in. That was the time when everybody said that infrastructure was growing. And a lot of investments you saw were taking place in infrastructure. I don't need to tell what IDFC on that, so you all know better than I do. But at that time, there was a lot of investment going on, a lot of hype about infrastructure. And a few incidents that I experienced told me that there was something to worry. So every few weeks, I used to get somebody or the other who had no experience of business or industry come and tell me that I have got a license for a coal mine and I'm going to set up a power plant. I have got the financial closure done. Banks are giving it to me, some private equity is giving it to me. That's when I started worrying that how can, if such people are going to be in par, the future is not very bright. And therefore, we consciously decided in 2010 that we should stay away from the infrastructure sector, though everybody at that time was going into it. We then made also another conscious decision as to what other sectors we want to be in. And one of those sectors we said is that we needed to diversify our risk out of India. We wanted to diversify into a geography other than India. And the best geography we felt was the United States. We wanted to be in an industry which was the future, not something which had, which had been already a mature industry. And if we could get something which was related to the businesses we knew. So at that time, I just want to remind you that the rupee was approximately 45 rupees to a dollar. In 2010, because of the growth in the Indian economy, there were many economists who told us that the dollar will, or the rupee will strengthen and the dollar would be like 35 rupees. And yet we took the contrarian bet of investing in the US. We invested in a company called DRG, which is still with us, which is in healthcare, information and data. What we do is we collect data, we buy data from outside sources, then work upon that data, analyze that data, do, as we say, convert that data into wisdom. And now when you look back, we did that investment in 2012, and when we look back, we see that some of the calls that we made seem to be right. The rupee today is at 66, so we invested at a much lower value. This is an industry which is continuing to grow. It grows at whatever be the GDP of the US, it's growing about twice or 2.5 times that basis. And thirdly, we said also that we wanted to be in healthcare, so it's in healthcare. And one more point is that we said we wanted to have some linkage with India. And now, last year we've opened up an office in India, or a business in India, where I've been really very pleasantly surprised, where the quality of people that we get, and these are people who do analytics and all. They're not just software engineers, but are much higher. And we found that this is India is a country which provides many of these people at productivity levels which are equivalent to the US at a much lower cost. So here we have a business today, DRG, its size is about 185 million in this year, and growing at between 12 to 15%, both a mixture of organic growth and some inorganic growth. Again, that's been our strategy consistently, and we continue to follow that. So that's one area that we did. As I said, it gave us a new geography. It gave us presence in the US, where at that time the economy was slow, but now it's growing well. And it gave us access to global talent. That was one big thrust we took. The second area that we then decided was to look at financial services. And why financial services? I mean, you know probably better than I would that if the GDP grows, financial services has to grow. And if the GDP growth rate is, 7.5% today, that's the nominal growth rate. Generally, financial services grows twice, some 2.5, 3 times, because count even inflation of 4-5% on an average, that itself makes it to 12.5%, and then if the economy has to grow, finance has to grow. That's why we said, let's be in financial services. And we looked at two, we said we need to be in both wholesale and retail. The best names that came up in retail, if anybody talked about, of course, would be IDFC on one side, but Shriram also came about. And that's when we said that let's look at what is the Shriram story, and started looking at it. And at that time, fortunately, Shriram also wanted to get a solid partner in, who would, the Shriram founder was about 76, who wanted to really hand over management to somebody else. And though there were lots of private equity interested, they felt that the values that our group brought was something that was akin to the Shriram values, and hence we invested in Shriram, which gave us an access to really retail finance. The Shriram group today has assets which are about 80,000 crores. We have about 1.2 crore customers, and we have 70,000 employees. So that gives us a very strong position in the retail space. And this is the space which is going to grow. If we believe that India has to grow, it's the small, the medium scale which has to take its growth forward. And we believe that Shriram is best positioned to do that. So that was one. Then again in financial services, we said let's look at the other sectors, because we had access to capital, a large amount of capital. Let's look at those sectors where many people would not be able to enter. Because that's been always, I said, our strategy. And we looked then at how, when we looked in the environment, we found that there was a big gap in funding for real estate. Banks were not allowed to fund real estate, and because the Reserve Bank had stopped banks from funding it because they felt that it will lead to speculative trade. But the fact is that real estate still needed funds. That was an area which we understood because we had been in real estate development for a long time in our other businesses. So we looked at that space and have actually felt that there is a huge opportunity to fund that, and we've seen that it is growing well. Many people wonder that if you do real estate, then there'll be large, NPLs. But our experience has been that we've not found anything in the last 4 years, and our books are pretty good as far as that is concerned. At the same time, we said that there is a shortage of capital in the system. In India, as you know, public sector banks control 70% of the banking space, and these banks today, unfortunately, are saddled with large NPAs. People say almost 15%. And over time, the quality of, I think, people in the public sector has gone down. So the ability to make decisions and make sound decisions has weakened over time. That's on one side. Also, because of the new norms of capitalization, where it's Basel III and so on, the capital and the NPAs on the other side, the capital requirement is so high that the government is not able to meet it. So consequently, there is, and foreign banks have actually, I think they are more and more reducing their presence in the country. So there is the wide space open for private banks and for NBFCs. And therefore, we also entered into giving large funding, where we had what the Vodafone transaction was. There were not many, there would not be many banks or NBFCs who could give such a large amount. We gave almost 800 million at one shot. It would not be many who would have access to those funds. And That's why we got into what we call special situations. So these are our two new areas, as I said. DRG, which talks about data and converting data into wisdom on one side, financial services, one's through Shriram and the other through our own book in real estate and other special situations. And the third part of our business still continues to be pharmaceuticals, where we have now many people think we have exited out of pharmaceuticals, but we are still in critical care, where we are the third largest company in anesthetic, inhalation anesthetic drugs in the world. We do manufacturing and services, contract manufacturing and services, and we also have OTC business in India, which is a turnover of about 4,500 crores today. So that is our three big businesses.
Thank you. I think that was very insightful. At least we get a sort of sense of what your focus areas have been. If I may now sort of ask you to expand a little bit more on how you want to grow the pharmaceutical and healthcare business going forward. Which are the areas within these services, the three verticals that you talked about, where you are personally devoting more attention, and how do we see that as a composition of your total revenue move in the next few years?
So when I look at pharmaceuticals, we are today running two different, let's say, within our system, two verticals. One is where I said products, which are the inhalation anesthesia products. And these products are actually, it's a global business. Almost 95% of the sales are outside of India. We have a market share in the US of 30% for inhalation anesthetic products. We manufacture this in India as well as in the US. So this is a product this is a product play where we have distribution. The distribution is in all the hospitals of the US and rest of the world. And we are really in the surgeries or wherever there's critical care. So this is one part of our business. The second part of our business is in contract manufacturing and services, where we do development of drugs, maybe development of APIs and formulations, as well as we do manufacturing for global companies. These manufacturing sites are in India, in the UK, in the US. You know, we have of late heard a lot of noise about FDA approvals and FDA warning letters from many, many Indian companies. Fortunately for us, we have been supplying in this space for many years, and all our plants are regularly more than, 3-4 times in a year, sometimes inspected by the FDA. Until now, touch wood, we've never had an issue. There's never been a warning letter. There's hardly been ever any. There's been no issue at all, and we've continued manufacturing for so many years. So what really shows is that we have a strong manufacturing. We also have a strong development ability. So now when I look at the future, these are different dots. That was the strategy, that now we would combine the two businesses, and you will find that we have the ability to manufacture, not only to develop products, manufacture them, and then distribute them through the critical care. So that is our strategy on the pharma side. We will grow this aggressively. We'll grow it both via organic route as well as through inorganic means. In the OTC space, where today we are present, 5 years ago, this is the only business we kept with us when we sold out our pharmaceutical business, only because we felt that we wanted to be in India, we wanted to be somewhere where the middle class is going to use products and it's going to grow. Therefore, consciously we kept this, and you've seen what the valuations of OTC since then have been. They've all kept on going up. Our rank in 2010 in the OTC space was 40th. Today we are already 7th, and we will grow in this space both organically as well as through acquisitions. So that's where we are in pharma. It is I think it's a good, strong business that we're in.
Thank you very much. Thank you for that. I was about to ask you, on the consumer side, you've just acquired Little, which is also a very strong brand. Do we see more of these acquisitions coming in the next few years on the consumer side? Is that a focus area within the healthcare segment?
Yes.
It is. If I were to now specifically ask you a couple of questions on I think on the market side there has been speculation without naming, but there is some speculation in the market about your financial services business and how you want to bring more shape to this business, both from the wholesale standpoint that you talked about, as also the retail financial services businesses where you've made some strategic investments in a specific group in the South. How do you see strategically your business in financial services taking shape, both from an investment standpoint as also from an organic on-balance sheet growth standpoint?
So in the long run, in the medium term, I look at both the retail side in Shriram and our wholesale side becoming like one entity. We believe that we are growing organically in both these spaces. We are growing organically in Shriram, and we are growing organically as far as our wholesale Piramal Enterprises is concerned. Will we do inorganic growth? I'm not so sure actually, because frankly I have found that it is very difficult in the financial services to really understand what's happening in the businesses. So unless and until we are there, we understand it, I would hesitate, because very often, what you see and what you really get are two different things. So unless and until we are very convinced about an acquisition, unless and until we get full transparency and can see through everything, we would not hesitate. And sometimes I feel that valuations, why do you need to pay so much when you can build it? There's nothing so unique that you get. And valuations today, the hottest sector today in this country is financial services. So unless it makes sense to us, economically, we will not do it just to get size.
One look at the balance sheet, my numbers may not be absolutely accurate, but I get a sense that the financial services business is in the region of 9,000-10,000 crores on balance sheet. If you were to grow the financial services business, perhaps that's the most capital hungry business on the balance sheet of Piramal Group today. How do you propose to finance the growth of financial services business going forward?
I think your numbers are right. We'll probably end the year with, I think, a little more than that. We'll end probably 15,000 crores. We still have leeway to raise debt. Debt equity ratios can be much higher in financial services, as you know. We have the ability to raise debt. We will do that. As a group, we are very conservative as far as raising capital is concerned. We acquired our pharmaceutical business first in 1988. We have actually raised money from the public in all these, and the turnover then was 18 crores. We've grown to this turnover without raising money. Only once we raised in 93 about 100 crores. And once we did a small rights issue. So we've been very, very conscious. We value our equity a lot. So we are very, very conscious and, let's say, stingy as far as raising capital is concerned. So we will continue to have that policy as and when we feel that growth is getting constrained because of capital. I think we have enough access to capital, but I don't see that happening at least in the next for the next couple of years.
Right. Maybe I can ask one specific question before throwing open the session to a larger Q&A. One specific question I have on the financial services is that you talked about a significant percentage of your financial services business, at least at start, to be in the real estate financing space. And now that's a sector which, as you rightly pointed out, not a lot of the banking market and financial services in general have skill sets in. So would like to hear from you a little bit more as to how you built the skill sets in that business and what's your broad strategy in terms of growth of that sector, that specific specialized financing in the course of the next few years, especially when we hear that there is particularly in sort of in parts in residential and commercial both, there is some slowdown in offtake. How do you marry the two and how do you intend to grow this piece of the business?
So why did we enter into the real estate space? We entered into the real estate space because this is a space that we understand. We are not in the financing business for long, but one thing we know that if you don't understand that space, it's not worth entering. So we had a deep understanding of this space because we have been in real estate in our own development capabilities right from, the 80s. You may probably remember Crossroads, that was built by us. So several other things. So we understand this space, that's one thing. Second thing is that, it's very easy to paint one sector as very good and one sector as very bad. As I said, in 2010, every second person was lending to infrastructure. Now look at what's the record of infrastructure loans and what's the record of real estate. So that's the other point. And again, what we do in real estate is very clear. We don't lend to anybody who has just one project. We lend to people who have more than several projects which are at several different stages of development. So it's not that if one project gets stuck for any reasons, for approvals, for markets, the others don't move. So therefore when we lend to somebody, we try and assess the risk that is there with that person. The other thing is that we also lend to high quality developers who will not just default. And the important thing is that, again, we have a very independent risk which reports directly to the board. We have an independent legal which reports to the board. We have a credit committee of some of the best minds of independent people who come and look at it. And then we have now we have 120 people just doing real estate lending, which is a large number. Part of them, more than half of them are really in just managing the assets to look at this risk, legal and all put together. So I think we've had actually a good experience. And the other thing I've found also in lending is when you become a significant lender, and if a person has to remain in business, they will not default with you. Because they would rather delay with somebody else because they know that they have to keep coming back to you the next time and they all want to remain in business. So we've had till now a very good run.
Thank you. With that, I think I'll throw the session open to questions. So maybe you all have an opportunity to ask a question if there's anything that you need to ask Mr. Piramal.
Hi, this is Nikunj Doshi here. I just wanted to know, means recently there was a press article about Piramal Enterprise acquiring Island FS. So what kind of synergy do you see with the group, and why you want to enter into infrastructure, your views on the same?
So first rule is don't believe what the press says. The company has not issued any statement on that. That was a speculative, it didn't look speculative, it looked as if everything is done. So we haven't done it. So question of synergy and all, there's nothing to discuss.
Thanks.
Hello, sir. This is Rajesh Kothari from Alpha Credit Advisors. When you identify any business for acquisitions or for joint ventures, what are the basically criteria which you keep in mind, number one? And number two, are there any financial parameter also which you keep, for example, ROE, ROC or payback period? The reason is the US segment for data analytics, while of course the capital employed is huge, the underlying ROE is still not that up to the mark. Of course, the valuations on EV to EBITDA can be very attractive. So how do you look at businesses when you acquire?
So when we acquire businesses, we first look at whether there's a strategic fit with whatever we are doing, or we feel that in the long term this will be of strategic value for us. And we look at ROE. In the US, many people ask me this question. I think we have to look at dollar ROE is going to be lower than that of the Indian ROEs, only because of two things. One is the fact that we will have the rupee has over a period of time consistently devalued, so you assume 5%. 5% is at least the devaluation over a time, every year. So add that to it. And also, this is a future business. If you look at the valuations that these companies command today, so the day we list it, which we will do in the next couple of years, the valuations are pretty rich. So valuations of all businesses in this are like between 15 and some of them are like 25 times of EBITDA. So I think we will get a good return. As I said, two criteria in this when we look at it. One is that the margins are high. The margin can be anywhere between 25 to 30% operating margin on one side. Secondly, that our business is growing at about twice of what the average growth of the industry is. So that's how we look at it.
But in the same business, we have invested the Indian capital, right? So
sorry, just speak slowly.
Yeah, so the same business, you have invested the Indian capital and not the dollar capital, correct? So
yeah, but when we invested, the rupee was 45 rupees to the dollar. Today it is when we invested it was 50, but it was 50. Today it is 66. So as it is, we've got the appreciation.
Sir, my second question is, since all three entities have completely different business dynamics, at over what period of time, would you like to, separate it independent kind of listing for each of your SBUs?
So at the right time, in the medium term, we will have all of them as independent companies when there is enough size, and we will do that. I think it's just a question of time, and when we see that they are, there's adequate size for people to follow in the markets.
Thank you.
We are actually running them as independent entities. They have independent CEOs and all in that sense, to see that we start getting used to that.
Any more questions?
Nikunj Doshi again. Can you brief on the other businesses of the group, so glass business, and what's your plan there, and the research outfit?
So we have the glass business is a private business. So we had privatized it. It's a business which is in packaging. We are leaders in cosmetics and perfumery bottles. and we also are leaders in supplying to pharmaceutical in India. Most of the turnover, about 70%, is outside of India. We have manufacturing in India, but also in the US and Sri Lanka. It's a good business, that's what I would say. The research, that's a small business. I think there's not much in it. Sometimes I think that the values in the market are higher than what it is. I keep saying this openly, because I don't want people to. So it's a small herbal business.
I thought there was a question at the back.
Hi, thanks for taking my question. Just wanted to check on this organizational structure.
Sorry?
On the organizational structure, are you trying to build once you have built it up, would it be more like an operating conglomerate or more like a financial conglomerate? And so what's your view on that? And secondly, is there any new fourth line of vertical that you're looking at in future? Thanks.
So the way we look at it is that even if we invest financially, we are operationally involved in everything. So every business that we have today on our balance sheet, we are involved in it. We are fully involved in, including Shriram. So let me clarify that as well. So it's not just a financial investment that we would do, but we would be involved in each of these businesses. Something else you wanted to?
Second question was on the, if in future would you go for a fourth line of vertical?
So as of now, we don't have anything on the cards, but I can't say for the future.